What's up, everyone? Welcome to the Social Investing Network, where we dive into the world of investing, stocks, crypto, NFTs, and more. I'm Nicole Casperson, and with me are my co-hosts Delano Saparu and Zaid Admani. What's up, guys? Happy Friday.
What's up, Nicole? What's up, Delano? Yes, it is Friday. Been a great, crazy week. We got a great show today, though. Meta is down, but not out. Meta recently reported earnings. Why is Meta stock on the rise even after underwhelming earnings? And I think my eardrum. Okay, sorry about that. And did you guys know that you can start taking selfies with a drone? Snapchat just released the drone. We're gonna get into that story and more. Delano.
Hey, what's up, Zaid and Nicole? We also have eToro investment guru, Cathie Cox, and she's back with us again to tell us why it may behoove you not to follow the market consensus. I'm interested to hear what she has to say. So stick with us and make sure you like and subscribe and hit the notification bell. Now let's get into it.
All right. Delano, you're kicking us off with the stories, right? The quick stories.
So yes, we are going straight into it with the quick stories today. So I had an interesting one, guys, and we'll tee it up right now. Snap is back, and this time they're back with their second hardware product. And this time, guess what? It flies. Yes, Snapchat has launched a flying camera drone called Pixy, and the drone looks like a small puck that takes off from your hand and follows you around the air and captures photos that's sent back to Snapchat. And this is I think this is perfect product, guys. And guess who it's perfect for? It's perfect for the partners of influencers and the partners of people that love to take pictures, all right? I'm gonna buy this for myself as a Christmas present, an early Christmas present, say, Nicole. I think it will be perfect.
I'm 100% getting this. Like, I'm 100% trying this out. I love drones. I used to buy those like DJI drones all the time. I bought the Snapchat spectacles as well. So I'm 100% getting this. I don't even use Snapchat, but I just need to see how this is going to work out. Plus, I'm a Snapchat shareholder, so like I got to know like what they're using their resources on. So 100% buying this for sure.
Yeah, I'm not gonna lie. This actually looked, at first, when I first heard about it, I was like, this is ridiculous. But seeing that video and seeing how tiny and compact it is, like, shoot, I might have to get back on Snapchat for this moment.
You don't even need to use it for Snapchat, though, right? You can just use it for whatever. So I'm 100% getting this. I just wish it was a little bit cheaper. I think it's 200 something bucks. If it was like in the 100, 150 range, it'd be like a no-brainer. Now I have to have like the conversation with the wife before I purchase it, but it's all good. I'm still probably gonna do it.
Ask for forgiveness, they say.
Yes, that's probably the move. All right, I have a crazy story. Elon Musk has sold more than $8.4 billion in Tesla stock. He's probably doing it because he has to raise the funds to fund his Twitter purchase that he famously did last week or earlier this week. I can't even keep track of time anymore. Tesla stock has actually been taking a beating lately because of this exact fear, right? People thought that Elon was going to have to dump his Tesla shares, sell his Tesla shares to raise the money. So Tesla shares have been taking a beating. They're bouncing back a little bit today because Elon did tweet last night that no further Tesla shares were being planned to be sold after the $8.4 billion. So I'm actually not sure if I believe him though, because I think he needs around like 20 billion in cash to fulfill this, to purchase Twitter. So he's gonna have to come up with the rest of that money somehow, but I guess he's not gonna be doing it by selling Tesla shares. But yeah, that's what Elon's doing.
Yeah, I don't know. You're right. Like, it has to be Tesla shares, or I know his other companies are private. So it's like, does he sell off some of those private stakes as well? Like, what is he going to do to get the liquidity is the big question.
I think he has a lot of rich friends, right? Maybe he calls up, Larry Page, Google guy, or one of his other billionaire buddies, and be like, hey, you mind putting up a billy? You mind putting up a billy? And then just raises the money that way. But SpaceX is also an option.
Yeah, it's a lot of options for Elon.
The options are endless for the billionaires anyway, except for like helping more of humanity. Anyway, the U.S. gross domestic product, the GDP, fell 1.4% annually in Q1. It's the weakest quarter since those lockdown heavy days of spring 2020, which is surprising and a little scary. The GDP is the most widely used measure of economic growth. It is a tally of the value of all goods and services produced in a country. And the US economy is expected, though, to expand again in the current quarter and keep up a modest pace of growth throughout the year, though recession talks have been around with hiking interest rates. So basically, it's still uncertain, per usual. So we'll see how things pan out. But yeah, I just kind of thought it was crazy that we were in a similar, GDP time or metric as those pandemic days, because it doesn't feel that. Yeah, it doesn't feel that dark and scary right now. But there's also, it's just like things are different. It's wild and crazy. But anyways.
Yeah, I'm curious on that, because I'm wondering why. Like, was it inflation that was like a big part of it? Supply chain? Like, what was the big thing holding people back or holding the GDP back in the most recent report? That's a really interesting. It was a surprising one.
Probably inflation. Inflation is to blame for it all.
Yeah, it's possible. Yeah, I'll have to dive into it, to do a deep dive into it. Maybe Cathie can answer some of our questions.
Yes.
Awesome. So wait, are we teaming up Cathie?
Meta story.
Meta.
Oh, my bad. I thought we were doing Cathie first. Okay, my bad. Oh, I just saw the note. All right, we got Meta next. Meta stock is surging even while company missed revenue expectations. Meta is down, but not out. So they reported their earnings earlier this week, and I guess the earnings weren't that bad, even though I thought they were kind of a miss. Stock is up almost 20% since their earnings. Delano, you've been doing a deep dive into their earnings. Can you give us a bit of a breakdown on what you saw?
Yes. So, Zay Nicole, it was, some good news, some bad news, but they missed revenue projections, which is the big thing that was on the bad side, in my opinion. But on the upside, Facebook is actually adding users. Yes, they had a 4% quarter over quarter increase in people on Facebook, which is actually interesting, because Facebook you kind of look at as the one as archaic. But I have a sneaky suspicion that some of it's based on people are so engaged in Reels and short-term content right now, short-form content, and a lot of that's being driven on Facebook too, as well as Instagram. So the company told investors that 20% of time on Instagram is spent on Reels, while 50% of time on Facebook is spent on videos. I know myself when I'm scrolling, I see all these Reels pop up. It's like really interesting. I'm like, all right, let me click on this one. And I really do click on it. But there's also reports that Mark Zuckerberg is obsessed with the metaverse, all right? He is driving employees and peers, just wild with his talk of the metaverse. This guy's trying to, balance between virtual and augmented, and he might get stuck in the metaverse. We have to watch out for that. But he's really obsessed with it. I have a sneaky suspicion that it's because he realizes he's put $10 billion into Reality Labs, the company that's really kind of frame and build out the metaverse. He's realizing that they could really monetize a lot on that side of things. We know that short-form content, you can't really monetize, but I do think they have big plans to monetize, Nicole, in that side of things. They've let some of the plans loose, but they haven't revealed all of it just yet.
Yeah, I agree with you, Delano. Meta's division, Reality Labs, has already pumped $10 billion into the metaverse and building that out. So I think, Zuck is on the right path. At the end of the day, it's all about niches to monetize. So this is the best route for them. The value of the metaverse is predicted to reach $800 billion as soon as 2024, based on a current valuation of $47 billion, according to reports from Go Banking Rates. Plus, Facebook is like the social media for boomers. Instagram is being overshadowed by TikTok, so it's about to follow suit. So I think just like heading into, if there's a time to be innovative and create something new, you have to start working on it now. And so putting all of his energy into the metaverse, he changed the company name to Meta, so it's not so surprising, but it makes a lot of sense. I think that these old social media platforms are just gonna, it's gonna take some time, but I do think that they're going to, kind of continue to have or reach levels of kind of irrelevance at some point.
Yeah, I agree with you. I agree with both of you guys. I'm still bullish on Meta. No one has a crystal ball, so but still, I'm still pretty bullish on them. When their stock originally crashed like 3 months ago when they reported their earnings, I bought some calls. Those calls are worthless now, but still, I'm still bullish on them long term. And yeah, I like the pivot. I believe in Zuck. It's still a founder-led company. The dude has been able to successfully pivot the company before when he went to mobile, back in 2010. And I think he can do it again. If anyone can do it, he can do it. And it's a founder-led company, which also helps. So I'm banking on that and their core business. I mean, they still have 2 billion plus people use their platform every
Exactly.
single month. I mean, that's what, like a third of the world's population. That's insane. And so I think this is I still feel good about them. And it seems like the market is finally starting to see that as well. And their stock, is starting to bounce. So hopefully we see more of that moving forward.
Yeah, for sure. Well, we are going to get into our next segment. There's the old phrase, there's safety in numbers, and that sometimes can apply to investing, where it's smart to align with the market consensus. But sometimes it's better to zig when others zag. So to help play devil's advocate with us today, let's welcome in eToro investment analyst and author of the Bottom Line weekly newsletter, Cathie Cox, to help break this down for us. What's up, Cathie?
What's up? Happy Friday. And I heard y'all talking about GDP. That's like my nerd heaven.
Oh, always happy to oblige.
Yeah, GDP is one of those reports where it is backward looking, but there are so many cool little details you can look at. It basically gives you a microscope into growth. So I love it. Happy to talk about it if you guys want.
Yeah, can you kind of dive into that? Because I love talking about GDP.
Yeah, you're like, okay, actually, let's do it.
No, because was anyone
Yeah.
expecting it to like be down 1.5% or whatever it was? Like I was kind of like, whoa, is this like, why are we not freaking out right now?
I didn't think that like inflation things, especially because it's backwards looking, right? I didn't think like the inflation aspects would hit yet. So it's kind of scary, it feels like, because then for Q2, is it gonna, I mean, it predicted that expansion, but like, I don't know, it seems kind of sus.
Yeah, okay, so let me give you a little econ lesson. So GDP, consumer spending, private investment, which is basically business spending, house residential spending, and then the change in inventories, and then it's government spending, and then it's the change in the trade balance. Now, you look at all those components, the two strongest components were consumer spending and business spending, which makes me think inflation isn't having a big impact on how people are spending, basically. So it wasn't really an inflation impact. It was actually the change in the trade balance that pulled away from growth, which if you think about it, it makes sense. I mean, the Ukraine crisis was happening. There's been a little break from globalization. The trade picture has been a bit messed up since then. And of course, there are the supply chain issues too. So, that was kind of surprising, but in a way it was a little encouraging. And I guess that's just me being a contrarian.
Yeah, wow. Incredible. Thank you. Glad. No, I mean, that's good.
I told you, nerd heaven.
Oh my gosh. All right, what else is going on? Why are you playing devil's advocate to the current market consensus?
All right, so yeah, I'm here to play devil's advocate. And I want to say from the outset too, as analysts, my job is to look at things and take both sides of the coin. Look at it from a bullish and a bearish perspective and really weigh the pros and the cons. Yep. So I'm thoughtful in everything I write, but this week I really wanted to point out some of the, common market consensuses and talk about, what if the other thing happens? What if we're thinking about it all wrong? Because wise investors, they're prepared for anything. So, everybody's kind of saying the same thing. I'm going to zag what everybody else zigs, right? So I'll take you through some scenarios we talked about in today's newsletter. And my first, it's a pretty hot topic. What if inflation has peaked? Now, I know that it's...
Already?
Okay.
I know. See, you're shocked already. But let me explain. So, yeah, we're seeing signs of inflation everywhere. And I think there's a little bit of a misunderstanding when it comes to inflation. Inflation is prices growing, and the right pace of inflation is actually quite healthy for the economy. You want to see prices growing at a slow rate, at a manageable rate, I'll put it that way, because there's demand out there. People are buying, and you want to see prices react to that. That's a growing economy. Now, clearly, inflation is out of hand these days. The last CPI print was around 9%, which is a lot higher than you want to see. But here's the thing. Where we're at right now, the market may actually be waiting for inflation to stop going up as much, to stop accelerating. I've heard a lot of talk about prices dropping. That's deflation. You don't necessarily want that because that shows that growth isn't super healthy. But where we're at right now, what the Fed is looking for, they're waiting for inflation to stop accelerating, and we're seeing signs of that potentially happening. Now, there is a chart that I want to pull up here. It's the price of shipping containers. And this was like the poster child for inflation, especially late last year, judging supply chain health and, shipping costs. But the cost of a shipping container is down about 16% this year. Oil prices down about 20% from their Ukraine peaks, which happened earlier last month. Used car prices, another one of those poster children for inflation, down about 6% since January.
Finally.
And I know. That got a little crazy. I had to get a car late last year, and the used cars were more expensive than the new cars. Little bizarro world.
Yeah.
Yeah. But I want to point out too, markets may be moving on from the inflation trade as well. Wall Street is always thinking 10 steps ahead, or at least one step ahead from what is going on right now. And we're seeing signs that there's a little bit of life out here in airline stocks and restaurant stocks. I'm also watching retailers, those stocks that you think people would pull back from, businesses people would pull back from too if they had to cut back spending. We're not quite seeing that in the stock market quite yet. So we think Wall Street is positioning for a peak in inflation, and that may not be where a lot of people sit, but that's the devil's advocate take for you. You guys want to hear my next one?
Yes.
Yes, we
For
do.
sure.
All right, I got you captivated. All right. So what if the economy is actually kind of decent? Now, I know that this is a very contrarian take, and I want to say too, it doesn't feel decent, and I don't want to diminish the fact that a lot of people are struggling in this environment. There are a lot of issues we need to fix here, and it's not great for everybody, not by a long shot. But when you step back and you think about the economy from an investing perspective, you're watching certain sets of economic data. You're watching the health of the job market. You're watching the health of earnings. And so far, a lot of that data looks good. There's a growing opinion out there that there are cracks in the foundation, and there are definitely cracks. But there's also the opinion that rate hikes are about to break them open. And, maybe they aren't. Honestly, the anchors of the economy, earnings and economic data look fine. Consumers and businesses are spending. Think about the GDP report again. Those were the two strongest components of GDP. And the job market is solid. And I want to show you guys something else. So here's a chart of the leading economic index. It's basically a composite of a bunch of leading indicators. And leading indicators are these economic data sets like durable goods orders, like filings for jobless claims that economists look at because they tend to turn before the economy turns. And as you can see here, we've seen this index turn before each of the last several recessions. But this time around, leading indicators keep chugging along. We're not really seeing weakness in the leading indicators. So maybe we're afraid of a crisis that could happen instead of a crisis that's actually happening at the moment. And I've got another hot take for you. What if Cathie Wood is right? Now, okay. Put on your shock faces. Oh my God. Tech is getting clobbered, and she's understandably getting ribbed for ARK's performance. She is certainly not right now. But at these levels, there could be some interesting stories in tech that you could get at a discount. And Cathie seems to be doing that. She bought up shares of Teladoc, I think yesterday. That headline came out. But even though higher rates theoretically discount future growth, what if the Fed has instilled too much fear into this market too? I mean, not a lot of people are talking about the scenario in which the Fed has maybe guided us too far into the rate hike side of the equation. And, they might have to, possibly pull back on that, especially if inflation has peaked. Short term, that could be a driver of tech stocks not outperformance, I won't say that, but like a rebound in tech stocks. Because if we see the Fed pull back on its rate hike plans, we might see that flow into growth stocks, especially a little more intensely than other stocks. So I guess what I'm trying to say is short term, are we overestimating the Fed? If we are, tech stocks could benefit from that. Long term, it's hard to say that society is not innovating at the speed of light. It's hard to be a tech investor, and we're not so sure which stories will play out here. But you got to think that the sector is gonna find its legs once we get through this cloudy, uncertain point. Because in the end, long term, markets follow trends in society. So hot takes, guys. That's what I'm carrying this week.
I have so many follow-ups, but we have to wrap it. But that was awesome. That was so awesome. I have so many follow-ups because I'm like, this is literally she's talking to like the person. Like I was the one who invested all these growth stocks. My Roth IRA is down like 45%. I have a lot of follow-ups, but we'll have to do that another day.
You don't want to ask
bummer.
maybe
All right,
just...
No, we'll have to save it for another segment. That was good.
All right. Alrighty. Well, thank you so much, Callie, for joining us. That was awesome. So much useful information, and always a pleasure.
Thank you,
Yeah,
Callie.
good to be here.
I know.
Thank you.
All right, that does it for our show today, guys. Thank you so much for tuning in. Be sure to like, comment, subscribe, hit that notification button. We'll see you on Monday. Have a good weekend.
See you Monday.
We out.
Hey y'all, thanks for watching. Make sure you tune in every day. Also hit that like, subscribe, and notification buttons. We'll see you tomorrow.